Everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 7th of February. We had a mixed market here this week, but it was quite volatile. S&P lost 17 basis points. NASDAQ gained 17 basis points. Biotechs were the bigger loser here for equities, and we lost ground in oil as well as Bitcoin and Ethereum. So let's take a look at these charts and make some sense of it. As noted, we basically finished flat for the S&P 500. This is the second week in a row we had a big gap lower that clawed all the way back by the end of the week, and we still have a pattern here on the daily time frame of these lower highs and lower lows. So this pattern of lower highs and lower lows here has occurred at a higher level than the last pattern of higher highs and lower highs and lower lows. And we are above the year-to-date anchored VWAP. That's that thick blue line, the anchor from the election, and the 20 and 50-day moving average. So I think 595-ish next week is going to be the important level to hold. If we break below that and hold below it, I think probably on a closing basis, then we could be in for deeper problems. And I will, of course, update that as I do every single day for Alpha Trend subscribers and X subscribers for $10 a month over there. Anyways, the S&P 500, I hope you were following me on Twitter today because over there I showed you that basically what we had happen in the SPY was we came down perfectly to the week to date anchored VWAP, ran right into the daily VWAP, and then I pointed it out here that it looks like it's probably supply, and then we got crushed right back down to that week to date anchor. So if you're not using anchored VWAPs, I think you're trading blind here, and that has given me and a lot of subscribers a tremendous advantage in this choppy market where things just aren't holding on very long. Longer term trend, of course, when we look at the weekly time frame, remains in a giant uptrend, and that is where you have to look at it and say, let's be careful to not get too bearish until we start to see some bigger picture trends breaking lower, and we're simply not seeing that. The Nasdaq traveled a good distance here today just to break last week's high and then come crushing back in. I always pointed out that these breakouts, you have to be aware of where have they come from prior to the breakout and always be suspicious if they have expended a lot of energy to get past a prior high because they often come back in. And that's exactly what happened here for the NASDAQ. We also came right back down to the week to date volume weighted average price. Next week, I think 517 ish is going to be the important level for this market to hold up. We're seeing all kinds of mixed messages from the earnings reports. We've had some really good ones, and we've had some that have just been crushing stocks. In those stocks that are getting crushed, there's still opportunities for shorter term trades. Not Roku, but Rocket Lab. That was a great one. Not Rocket Lab either, but Roblox. It was one of those R ones. Anyways, Roblox was a nice trade in here, and so have a number of these stocks that have been hit hard. So tune in to Twitter even if you don't pay. I put a lot of free stuff out there. The Russell 2000, this is what I'm hoping we see happen in the Russell 2000. Let me just clear that up a little bit. And we keep coming up to the anchor from the election. That's that orange line. You could say that we're also at that 50-day moving average, and that's fine. But what we've seen 2 weeks in a row is that we've broken that little prior higher high. We broke that band of resistance in here last week. And then I'm drawing on a laptop and I'm used to using a mouse, so forgive my slow drawings here. But 2 weeks in a row, we broke past the prior week's high and then came back in really hard. So this is why I always talk about not buying breakouts after the market has made an extended move. Now, the Russell 2000 has pulled back right to the 20-day moving average, right to the week to date anchored volume weighted average price. This market has the potential that if it can kind of right itself here next week, that is, maybe, if it can hold on to a higher low in here, then rebuild a little bit of energy, then maybe it can break higher. But there's zero evidence of that about to happen yet. The 50-day moving average, that blue line, is declining. It will continue to decline for the next 3 weeks unless we start to rise quite rapidly, because this is where we were 50 days ago, meaning when we average that 50th day off and replace it with this, you're going to see that 50-day moving average will continue to decline. And that kind of puts a cap on things a lot of times. Doesn't mean it can't rally, but the odds just are lesser when that happens. So you use that information for your position sizing. Semiconductors, right up into this band of potential supply, they came perfectly right up to the year to date anchored VWAP. That's what we see on the right hand side. That's that blue line, which is also the blue line here on the daily on the left. It's also the anchor from the election. So we have a 20-day moving average and a 50-day moving average in there. The semiconductors just continue to be a mess. NVIDIA did have a very nice rally. And as you can see, NVIDIA right up to the anchor from the beginning of the year. This is also where we had prior support. Support broken tends to act as resistance. We have a declining 20-day moving average in here. If you're long NVIDIA, be aware that I think you ought to be raising your stop dramatically in here because we're in an area where it's supposed to pull back. And even if it pulls back, maybe the most bullish thing it could do is something like this, but it's not doing that yet. I had explained about Tesla this week that, the continued beating of the anchored volume weighted average price from the election with the lower highs made the odds greater that it would in fact break down below that level, and that's exactly what happened. Now you look at it and we see on the right hand side that Tesla is below a declining 5-day moving average. This is right now guilty until proven innocent. There is no reason to be a buyer of Tesla that I can see. And the people who are buying it on these little, chasing these little rallies in a downtrend, and the downtrend is here on the 30-minute time frame where we have a declining 5-day moving average, and we have a very clear pattern of lower highs and lower lows. You don't buy stocks in downtrends unless you're maybe Warren Buffett, who's looking to build a position out very long term. But even that's not even working very well with Occidental Petroleum, which I've been talking about for the last 6 months as being a complete waste of time and in a downtrend and a stock to avoid. And it continues to be one. So Tesla, everyone wants it to go back up, and it probably will eventually, but what we need to see is some consolidation at a minimum. We're right at the anchor from this gap right here. And again, I'm drawing with this I hate these mouse pads on the computer, on the laptop. I'm saying, um, but anyways, there's no evidence of support here. People say how it bounced from that level, and it did bounce intraday. The thing is, when you're looking for a bounce, you first, if it doesn't survive as a day trade, and it's not supposed to survive with a declining 5-day moving average, but if you buy it for a day trade, great. Have a strategy for taking your profits when you have them, because with that declining 5-day moving average, the odds are that this will happen, and that's exactly what did happen. How low can Tesla go? It can go as low as people get sick of selling it. Maybe it pulls back down to the anchor off of the August low. That would bring it down towards 315. That's not a prediction. That's a level of interest on the downside where it might sell off to. Let's wait until we see what happens. There's no reason to predict what the downside is. If you're really aggressive, then you're shorting as it breaks down after the short-term rallies. But right now, again, there's no advantage to being long Tesla. Biotechs, they just continue to act terrible. And here's another group that did exactly what I'm talking about, which is that they broke out after an extended rally. And this is something that, if you buy these breakouts, just because it broke past that previous high, you have to ask yourself, where has it come from? And what's the primary trend? The primary trend, we're still below a 200-day moving average. We're below a 50-day moving average. We're below the year to date anchored volume weight, or I'm sorry, we're right at it right now. But the biotechs came up to this prior band of support, and it's very similar looking to really to NVIDIA right now. Doesn't mean NVIDIA is going to do this, but you have to look around and say prior support tends to act as resistance. Well, in the case of biotechs, that's exactly what happened, and right at that anchor from the election. And that's where we see NVIDIA as well. It doesn't mean that biotechs predict NVIDIA. That's not my point at all. My point is this is how markets trade structurally. And when you're in a primary downtrend or a suspect, you have to look at it and say, where has it come from, and not chase those moves. Otherwise, you're going to get losses for chasing. The first rally that we saw in the financials just a week and a half ago. That breakout failed, but then we saw Monday's gap lower quickly gobbled up, and the buyers remained in control throughout the week as it maintained above that volume weighted average price for the week. So this remains the strongest group. I don't trade them, so I'm really not too interested. Energy names are looking pretty ugly here. They're getting trapped below that anchor from the election. That's that orange line, the year to date anchor right in here. And this is another group that did the same exact thing. And this is what I was telling subscribers is don't buy this breakout here. Look for instead a higher low. Now, maybe this is going to be a higher low, but when you look at the daily chart, this is just looking pretty ugly here. And it looks more likely to me, doesn't mean it's going to happen, but it looks more likely that it's going to decline. If it rallies up into here, recovers, makes a higher low, then I think you could buy a break past there. But until then, it's below declining 20, 50, 200-day moving average. It's below the year-to-date anchor. It's below the anchor from the election. It's guilty until proven innocent. That's going to conclude it here for me. Hope everyone had a good week and have a good weekend as well. Thanks.